The annual cost report is just a comprehensive review and look back as to how we manage the cost over all the asset classes. The importance is that member benefits are paid out of net returns, net of fees and expenses. So this comprehensive cost report gives the board an overview of how the staff manage and monitored the cost from calendar year 2018. It also supports our investment belief number 3, managing costs yields long-term benefits. We have 4 years of cost data, and cost data is more meaningful over long horizons, so 10 or 15 years. And CalSTRS saved approximately $240 million in cost compared to our peers using the same asset mix. This is our first attempt of identifying assets related to the collaborative model. Previously in our cost reports, we compared investment management to external management, and the collaborative model assets were in that external management. What we're doing is we're carving those out, and we're using criteria like if we have more control of the asset, or we looked at also co-investments. So going forward, we'll be able to provide the board a comparison of our collaborative model assets based on or compared to our external management.
The CalSTRS Review of Funding Levels and Risk Report is one of the tools that we use to monitor the funding plan. It's a report in which we purposely look at negative events and how they could impact contribution levels and the funding of the system. The next important step in the monitoring the funding plan is the review of the actuarial assumptions. We're talking about the assumptions, for example, how long are members expected to live, at what age do they retire, what investment return we expect to earn on our assets. All of these assumptions, which are key to the long-term funding of the system. One of the other highlights in our report, we spent a lot of time talking to our board about the potential impact of a recession. And one of the key highlights is if we were to have a recession in California that results in both lower than anticipated investment return and potentially a decline in the number of teachers in California, it could put significant strain on employers' budget and CalSTRS' ability to reach full funding.